and personally I wouldn't actually have a stop loss with that trade because it could easily spike. In fact, if you look at all of my, but I'm not sure if you guys are aware, or some of you may, I've decided to do the exact opposite on Instagram that most traders do. So the world is full of fake pretending traders that stand in front of their Lamborghinis and stuff like that. So what I'm doing now is I'm posting the worst trades I have every single day. So this is my Insta. So yeah, what I'm doing so I'm literally just posting all my losing trades. But anyway, all of these losing trades typically I'm being stopped out by bloody spikes. And the thing that's really pissing me off, I'm calling it the 16 grand nappy trade. This was me, panicking in a moment of sheer terror whilst I was changing my youngest son's nappy, and I stupidly had my phone on the floor, and I was sort of glancing over as I was doing it, and I saw, because I was going long up here, and it was just plummeting. It was plummeting. I was like, ah! And look at me, I was dicking around on the 15-minute chart. So of course it's going to look crazy. So yeah, I just closed the trade, and I thought, ah, shit. And then if we now go to that, can we zoom in? So it's 27. Oh, I can't. So I'm going to have to look in. So I got in at 27,700 at £30 a pip. So if we now go over here, look at this. So 27,700 is around about. Let's look at the 4-hour chart. It's probably a lot here. So 27,700 is around here. It's gone up another 659 points from there. So 659 times 30. Yeah, that would be a 20 grand trade right now, instead of a 16 grand loss. Annoying. I don't know why I'm talking about Instagram. What was the reason? Obviously, if you've been watching the Macroeconomics videos, you'll see what I'm about to say in much more fidelity. But off the top of my head, I guess in no real particular order, we've got unemployment. So global unemployment. It's gone through the roof. Okay, it's ridiculous. I mean, hell, Rishi's just said that furlough is being extended to March. Sometimes I feel so jealous that I'm just, I'm not an employed person in a comfy job, because some people have been furloughed for most of this year on 80% or 100% pay, and not responsibility in the world. But mind you. Yeah, anyway. So global unemployment is going up, and that's only going to go up. I think the last time I checked, US unemployment was around sort of 25 million people. And, there's no stimulus checks at the moment in the US. So people are bleeding, like, financially. So that's only going to go up, especially when we've got global lockdowns. So when we've got global lockdowns, like, companies are going to go bust. There's all sorts. So, yeah, no stimulus. No stim for the public at the moment. This is US related at the moment. Probably won't be until in the new year. But meantime, at the Mo. So that's that one. In the UK, we're sort of being teased with some compensation for having to force shut our businesses, but. Yeah, it's not really. Business owners are getting absolutely screwed. It's pretty painful if you're in the retail level. So now we're moving into winter, obviously, and winter is an interesting thing. So we tend to think of things like Thanksgiving or Christmas, Halloween, etc. And a lot of people incorrectly believe that winter is actually a busy part of the year. It's not. Winter typically in the northern hemisphere is actually slower in terms of GDP. So So what's going to happen is GDP is going to slump a bit. Now, especially with lockdowns, again, I'm just put LDs, that's only going to hinder things. So GDP is going to start to fall across the world. Now, moving into winter in the Northern Hemisphere, and by the way, Northern Hemisphere, 90% of the world's population are in the Northern Hemisphere. So it's literally most of the world. So, yeah, lockdowns is not going to help. Maybe energy stocks will do okay, depending if it's a cold winter, but it's negligible. So, again, that's that. Yeah, so supposedly, COVID is growing exponentially, but, and we're also moving into seasonalities here. So, every year, the common cold, the common flu spikes up. If you look at NHS data, all COVID cases and flu and cases are being combined into the same stat, which I think is quite laughable. So yeah, all of these cases are going to go up, right? So you just have to go with what the governments have been doing. So they're going to be, COVID's going crazy. So what's going to happen? More lockdowns. But I said this ages ago, that the second lockdown will be, multi-month thing. And then even the other week when Boris said, hey, it's 4 weeks only, I was like, bullshit, it's not 4 weeks. I felt like Carl Pilkington going, bullshit. You can't see my video's not on, but yeah. So, the fact that Rishi is extended, I got a news article. I think he's extended it till March, I believe. So if we just get the picture out, I think it is this one. Extend furlough scheme to the end of March. Okay, well, here's me being facetious here, but I don't think he'd be doing this if we're going to be coming out of lockdown in 4 weeks. I think we're most realistically going to be in lockdown or some form of lockdown till, the end of March, when typically, normal seasonalities, diminish in terms of viruses and stuff like that. So that's that. So more lockdowns, which is also going to make GDP just fall off a cliff even more. What else is there? Also don't forget Boris he's now all in. He's pot committed with his sort of lockdown thing, and he's spending £100 billion on testing. And he said, we won't have a Christmas until we're all doing daily testing. The army's now going to Liverpool to force tests and all that sort of stuff. So obviously you just got to carry on the charade or whatever your stance is. It's more lockdowns, GDP is going down. Small businesses are being absolutely demolished. So that's not going to hurt. That's not going to help, sorry. If you then look at money velocity, that's still in the gutter. It's going to be even worse now there's lockdowns. I haven't even checked MV for a while, so let's just do that now. So MV Fred. I always do that wrong, so let's try Fred MV, money velocity. There we go. Let's click the top one. Oh, we got a little bounce. Looks like a little bounce. But yeah, it's gone, hit a low there. We've got a tiny little bounce. Let's zoom in. It's going to be negligible, especially now that we've got this lockdown stuff. This little bounce is gonna be like a dead cat bounce, basically. Oops. So it's going to be boom and then continuing down. So that's that. What else is there? So MV is in the gutter. Well, guess what's going to happen to bankruptcies, C's, plus delinquencies across the board? They're just going to go through the roof. And also in some countries, like loan forbearance, as in debt holidays or so to speak, God's sake, I can't spell. For, and then bear, and then ants. That's stopping soon, so that's only going to increase bankruptcies and delinquencies. Again, what's that going to do? It's going to make GDP go down. Remember, GDP is the false god of the the crony capitalism world at the moment. And so banks, this all then leads back to banks. So if you look at, I should have got the charts ready, but if you look at banks, they're all silently building up a big long position on bonds. So banks buying bonds. And so you have to understand, why are banks buying bonds? Well, typically what happens when you enter a scenario where, you know, cash is being, you know, eroded away with all sorts of stimulus and stuff like that, people, you know, they flock to something which has some form of a yield, like bonds, etc. But that's not the reason why banks are buying bonds. So they're orchestrating a massive winning trade here for themselves. So imagine that you were a bank. Would you be lending right now? Hell no, because everyone is losing their jobs and businesses. You don't really want to lend, even though the government's trying to force you to lend. So what will happen is that banks tighten criteria, lending criteria. Okay, so this is already happening right now. Please Google it. So what does banks tightening lending criteria do? It's then going to force rates to drop even more, because the central bank will then try and force their hand and go, right, we're going to lower rates to try and get you, you know, to lend again. So rates are going to then drop, which then means it's going to force people into buying bonds. So then bonds, as in bond prices, will go up, which also means that yields will be going down. But yeah, so long story short, bonds are, I think, are set for a massive surge. Now, I don't trade bonds, but and guess what? So this is like the banks controlling their own trade. They're like, right, we're going to buy shitloads of bonds now, because what we're going to do is we're going to tighten our lending criteria. That's going to force the Federal Reserve's hand. They're going to drop rates, which means everyone will then flock to bonds. And then guess what? We've already got a position in. So if anything, this is one reason why I see negative rates coming relatively soon. I see lots of people going, oh, all this financial stimulus, we're going to see, you know, runaway inflation soon. Nope, not for a long time. So yeah, negative rates. And so also the other thing you need to look at is the savings rate. So the savings rate is going up because people, you know, are scared. They're trying to save money. They're trying to pay down debt, etc. So there's dollar destruction. So your savings rate is going up, and that also doesn't help MV. So that means MV is then going to carry on going down. So yeah, I mean, that's my thoughts. I'm getting lots of personal messages going, Simon, what the hell are you thinking is happening right now? Well, this is, I think, the bigger macro picture that I'm seeing right now, which means it's an absolute clusterfuck that's about to happen. Ah, shit. So just looked at my $1.30 Dow trades. We've got a bit of a tumble. Whoa, look at that. Probably something like Trump has won a state or something. I don't care. I'm leaving it for the moment because it's going to be up and down. So, what is that on the? Yeah, is it? Yeah, nothing really. So let's just leave that for the moment. So, yeah. So until the circus is out of the way, none of this will. Yeah. So this won't, I guess, proceed until the circus has stopped. So someone said that Biden is the president, and then there's a sell-off. Really? Okay, well, I still keep logging into this, but the AP hasn't called it yet. So let's look at the chat box. Right. Andy has asked, what do I think about health passports in the UK? It's an absolute civil liberty travesty. Don't like them. Again, no one is forcing a brand new untested vaccine on me. I will do that kicking and screaming. So MK says, hey Simon, what's your thinking for getting into Tesla if it's still likely to drop? Is it a small hedge in case it rockets up from here? Yeah, so of my total pot that I want to go into Tesla, it's like a fifth. So I want to put at least 100 grand into Tesla, and I think yesterday I put like 20 grand in. So it's just a little thing in. So, and it's also a little hedge in. So talking about Tesla is actually a little hedge for me, because I want to buy as you know, I'm waiting for the new Model 2 to come out. It's going to be a few years, or maybe I want to buy a whole bunch of Model 3s when full self-driving comes out. But every little milestone that they make with full self-driving in Tesla, they're pumping up the price, and at the same time, the share price goes up. So I think by having a little stake in in Tesla now, that means that I can, wait. I'm hedging that really, so I can wait until I'm ready to go and buy 20, 30, 50 Teslas and have my own little taxi company. And and obviously the full self-driving feature would have gone up a lot by then, but it doesn't matter because if I've got a little stake in Tesla stock, if that goes, I'm hedging that. So apparently there's a sell-off on the 50 on the Dow, but this will come back. This looks dreadful on the 5 and 15 minute chart, but it will come back. It always does, especially because we're not out of the woods yet with the elections. So James, what do you make of the US indices rallying? Meanwhile, dollar is being shafted by the bears. Yes, they are being shafted by the bears. It's just election stuff. You're just going to end up getting whipsawed forever. Go long in US 30 for day trading. Yeah, that's what I wouldn't recommend doing what I'm doing, by the way. I feel like I've been a rally driver that's been preparing for a certain moment, for a certain race, for many, many years, and it's now here. And so I'm teaching you guys to do mirror signal maneuver, feeding the steering wheel, hands at 10 to 2. Whereas I'm drifting. So let's look at not stocks. Let's look at some crypto.